Bank of America just raised NVIDIA's price target from $165 to $190, following an impressive 18% climb in October that's pushed this tech giant to record highs. But the big question is, are we looking at a golden investment opportunity, or have we missed the boat? Let's first put this 18% surge into context. NVIDIA had been trading inside a consolidation since July, following a challenging earnings window for big tech that saw NVIDIA decline by 35%. During this period, social media was flooded with market top predictions. You know how it goes. Everyone loves the clout that comes with calling a market crash, but there's not much profit in that game. People rarely learn. Throughout this period, I kept emphasizing patience on my social media channels. Yes, big tech was struggling, and due to their heavy index weighting, we saw the NASDAQ 100 drop 16%. But here's what the vast majority of people missed. Lower weighted stocks like Coca-Cola and Walmart kept pushing higher. This signaled that we were likely dealing with a market correction rather than a crash. And guess what? Instead of crashing further like finfluencers were screaming, the indices and big tech stocks formed a base. Fast forward to today, and we're seeing the S&P 500 and Dow Jones setting record highs, with the NASDAQ 100 not far behind. It might even have hit new highs by the time this video goes live. Now, there's a valuable lesson here about how little people online really know. Many are just opportunists trying to make a name for themselves in an industry where they lack credibility, often taking advantage of those who aren't financially literate. It's important to protect yourself from this misinformation, as it can significantly hinder your growth and wealth creation. In the end, you are responsible for the choices you make and the people you choose to follow. Now, let's dig into what exactly caused NVIDIA's ups and downs over the past couple of years. To understand the July and August declines, we have to go back to October 2022, which marked the end of a significant 38% decline in the NASDAQ 100 and a hefty 70% drop in NVIDIA. That's when the bulls really started taking charge again, pushing NVIDIA into an incredible rally of around 1,000%, which brought the stock price over $1,200 per share. And that rally eventually led to a 10-to-1 stock split just this past June. But here's where the natural market rhythm comes into play. After any massive run up, stocks typically enter a period of consolidation. And for NVIDIA, that round number of $1,000 pre-split became a psychological barrier, which led to a natural pullback. If we go back even further, you'll see this pattern repeated. A 650% climb between 2016 and 2018, followed by a 58% drop in 2018. Then from 2018 to 2021, it was another 1,000% rise, followed by the 70% drop in 2021 to 2022, and then another 1,000% climb between 2022 and June of this year. So when people saw that 35% drop from June to August, it was really just another piece of a longer trend pattern that NVIDIA has been following for nearly a decade. We're talking about a pattern of major uptrends followed by declines and then back to uptrends. And if history does repeat itself, this recent 58% climb we're witnessing could just be the beginning of NVIDIA's next big move up, potentially another climb of 1,000% or more. All right, but let's take a closer look at what's been driving this latest 58% recovery after such a challenging earnings period. A few key elements are at play here. First off, NVIDIA reported record revenues in their recent fiscal quarters, driven primarily by growth in their data center segment. Demand for AI and gaming products has been high, and NVIDIA has capitalized on that perfectly. Moreover, NVIDIA has made some savvy moves in expanding its partnerships, particularly in AI and data center tech. They've launched new AI platforms, strengthened collaborations with major cloud service providers, which has only solidified their position in the market and added to investor confidence. And then there's the broader market enthusiasm around AI and accelerated computing, which has only added fuel to the fire here. Now, what's fascinating is how these factors are consistent with what's driven NVIDIA's growth in previous uptrends. Across the board, you see a pattern: significant technological advancements, stellar financial performance, strategic partnerships, and market trends that align perfectly with NVIDIA's core offerings. Okay, let's look to the future now. What could take NVIDIA stock to new heights? Could we see it hit $200 or beyond? First up, NVIDIA's continued leadership in AI and deep learning is a huge potential driver. They've been investing heavily in AI, which could set them up to dominate the space even further. They're developing models that can handle complex tasks and creating infrastructure that could be foundational for enterprise and cloud computing. Then there's their push into data centers. NVIDIA is partnering with major cloud providers and rolling out new products that cater to the demand for large-scale data processing. And as companies adopt more cloud-based solutions, NVIDIA is positioned perfectly to provide the tech needed to power these operations. Now, of course, let's not forget about gaming. The gaming sector is a giant driver for NVIDIA, and as they keep enhancing their gaming graphics, the potential for further growth in this area remains strong. They're also seeing growth in professional visualization, where industries like automotive design and architecture are increasingly dependent on high-performance graphics solutions. Another area of growth for NVIDIA is generative AI. This trend is booming, and NVIDIA's tech is well suited to power applications in this space. As more industries adopt AI for everything from content creation to data analysis, NVIDIA's hardware could see even greater demand. But all this potential also comes with its challenges. So what are the headwinds facing NVIDIA? For one, supply chain distribution are a real concern. As we've seen in the past, delays in chip manufacturing can affect production schedules and reduce availability. And let's not overlook the competition. NVIDIA is up against some heavyweights in the industry, including AMD and Intel, who are making strides in GPU and AI technology. Staying on top in such a competitive landscape will require relentless innovation. There's also the matter of regulatory challenges. NVIDIA, as a global player, is bound by complex regulations across different sectors. From data privacy laws to trade restrictions, any shift here could have operational or financial impacts on the company. Plus, NVIDIA has to keep pace with rapid technological advancements. If they miss out on a significant trend, it could cost them market share. And as the field of AI becomes more saturated, market saturation could drive down prices and profits. Geopolitical tensions also present their own set of risks. As a US-based company with business interests in places like China, NVIDIA must navigate tariffs and potential trade barriers. How they handle these external challenges will play a big part in shaping their growth trajectory. However, as we've seen with NVIDIA's past 3 uptrends, they've proven their resilience in the face of challenges. And right now, we could be on the brink of the 4th major uptrend. That's something I'm keeping an eye on, waiting to see if we get a confirmation through a series of higher highs and higher lows in price structure. Let's talk about NVIDIA's recent 10-for-1 stock split. A stock split like this can influence investor sentiment and stock price in some interesting ways. First, it increases accessibility. The lower share price brings in more retail investors who might not have considered buying shares at a higher price. It also makes the stock feel more affordable, even though technically the company's value hasn't changed. This psychological effect can boost demand and lead to increased trading volume. Another benefit is improved liquidity. With a lower share price, it's easier to buy and sell shares without affecting the price too much. This is especially useful for large investors who need that flexibility. Plus, a stock split often aligns a company better with index funds and ETFs, which could make NVIDIA even more attractive to portfolio managers. So the split might be a catalyst for further growth as well. Ultimately, while NVIDIA faces challenges, it's consistently demonstrated a capacity to innovate, adapt, and lead in a highly competitive and dynamic industry. From record financials and partnerships to pioneering products, NVIDIA has a strong foundation for future growth. As an investor, I'm waiting for clear signs that NVIDIA is entering its next uptrend, looking for confirmation that the 4th major uptrend in its history has indeed begun. Once we see that series of higher highs and higher lows, we'll be ready to add more NVIDIA shares to the portfolio and capitalize on this interesting journey ahead. We've been holding NVIDIA shares since the start of 2023, and further moves to the upside could see NVIDIA move towards that $200 per share mark. Microsoft, a tech stock with the potential to rally higher, is on the verge of breaking out of its own phase 2 consolidation. Recently, Microsoft settled a $69 billion lawsuit with gamers. In this video, I examined whether this announcement could be the catalyst to push the stock out of consolidation and onto its own next major uptrend.